Hello everyone and welcome to AGI's GeoWebinar series. My name is Leila Gonzalez and I'll be moderating today's GeoConnection webinar, Geoscientists in the Finance Sector. Now in today's webinar we'll listen to the following three geoscientists from the finance sector as they discuss their career paths, give an overview of their work environment and daily activities, and provide some tips and advice to students and graduates who are interested in pursuing similar career paths. Our speakers today include Mr. G. Warfield Skip Hobbs, who is the President-elect of the American Geological Institute and the Managing Partner of Ammonite Resources, Energy and Mineral Advisors, and he'll be speaking about geology in the finance sector. Then we'll hear from Dr. Craig Jarkow, who is the Managing Director of Pinebrook Road Partners, and he'll be talking about creating energy companies, private equity from a geoscientist perspective. And then we'll be hearing from Mr. Gregory B. Jansen, who is the Managing Director of Common Fund Capital, and he'll be speaking about From Rocks to Stocks, the Evolution of a Geoscience Career. And these presentations again will be followed by panel discussion where the questions from the participants will be addressed by the speakers. And again, you can ask your questions at any time during the webinar by typing them into the question box on your webinar panel. So without further ado, I'm going to go ahead and pass the slides over to Skip. And Skip, when you're ready, you can take it away.
Okay, well, I'm delighted to participate today in what is a very unique niche for geologists. Financial institutions provide billions, tens of billions of capital every year to companies involved in energy resources, minerals, aggregates, water resources. And somebody has to be in a position to advise the bankers that, this financing makes sense at a technical level. And that's what we as geologists do in the energy finance sector. I'm going to talk about who employs geologists in the finance sector, then the type of work they do, and then really focus on the principal activity, which is due diligence, and then the skill sets that we have. We'll cover these topics, but first I thought I'd give a little bit of background on, who is Skip Hobbs and how has he come to be involved in the finance sector. There's me at work, quote unquote. I got my undergraduate degree at Yale College, actually in hard rock geology. Then I went to work for Texaco I worked in Ecuador for 3.5 years and then decided I really liked petroleum geology, so Texaco sent me to Imperial College, University of London, and then I was back at work for Texaco in the North Sea. Had assignments in India and Portugal, did that for 7 years, and then took a job with Amerada Hess in New York, where I started moving from purely the technical aspect of geology to the bigger picture, to the political science, the legal issues, and that was very, very exciting. In 1980, the oil industry was booming. I was located in New York, where there was a lot of capital flying around interested in getting into energy. And I started my own company in 1980, which is Ammonite Corporation. And Ammonite continues today. We are a group of explorationists who conceive exploration projects both in the United States and overseas with very limited capital. So we always have to go to the capital providers to get funding for our projects. In 1982, I formed Ammonite Resources, which is our consulting company. And our client base is principally the financiers of both oil and gas and mining. We're right now doing a lot of geothermal work as well. What has really helped me in developing contacts. I'm not exactly at the Petroleum Club in Houston, so I've been active in the AAPG and more recently very active in the American Geological Institute. And I think this is, if you're going to be in finance, it is very important that you know who the players are in the industry and you know who the players are in finance. So let's talk about who would employ a geologist. These would include the institutional investors, private equity, money managers, hedge funds. Both Greg and Craig are involved with companies that manage funds, so you'll hear from them. And of course, there are the investment banks that provide financing. We presently at Zannonite are working on a project for a major investment bank that involves a geothermal project. Security for take a company public, they need somebody to do the due diligence. You know, are the assets for real? Does the geology make sense? Are the forecasts of oil and gas production, mine production reasonable? Is the time frame reasonable? Security research firms would engage geologists to do the same thing. Are the representations being made reasonable and valid? Wealthy private investors always need a second technical opinion. I have traveled internationally right now for one of the guys at the top of the Forbes 400 looking at some projects on behalf of his investment fund. Banks are another source of employment for geologists, although generally banks will hire petroleum engineers to do the number crunching. But from time to time, geologists are hired to look at the bigger picture. Insurance companies are also a source. Law firms, principally in securities litigation. Project we're working on right now involves an international drilling venture where the operator made claims of a major discovery. The stock price shot up, and then it turned out that the project was uneconomic. So the work of the geologist is to determine, you know, what was actually known when this project was drilled. Did the seismic, did the well logs discover it? And then there are government agencies. One of my biggest clients in the 80s was actually the Justice Department and the Internal Revenue Service. Ammonite was hired as experts of securities fraud case. Actually, the Bre-X gold case, which was one of the biggest frauds, was something we worked on. Try to explain to the government, you know, what really happened here. Was there actually any gold out there in Indonesia? It's a fascinating. Okay, let's look at how they are employed. You know, it sounds very interesting, but most of these firms do not hire geologists directly. It's rare. Your work is principally that of a consultant, either as an independent consultant or working for a large firm. So what does geology do in the finance world? It's review of looking at prior reports and commenting on their reasonableness. It's doing original research, preparing reports, and it's actually a big role I find is acting as the interface between the technology and the investor. the investor is very excited about 3D seismic or the latest, pre-clue what that really means. So as a geologist in finance, we would explain to the financiers what the latest technology does, how risk is reduced. And that's a big role. It's holding hands, making them feel comfortable. Expert witness testimony, it's a very, very exciting aspect of being a geologist on quote-unquote Wall Street. I really enjoy it, and of course the compensation on litigation is a lot higher than the compensation for just interpreting a well log. Let's talk next about the due diligence process. This is really what our work is all about, and we have to understand the geological setting. Where are these assets, whether it's oil and gas, mining, or water. For one firm, actually it was a bank that was going to do a mortgage on a gravel pit here in Connecticut. I actually had to look at resources of a gravel pit for somebody who was going to provide financing for that. Taking a good look at proved, probable, and possible reserves is something that we do all the time. Looking at a production profile right now, everybody is very excited about shale plays, unconventional plays. Trying to understand and explain the production profile, the ultimate right now. Geotechnical methodologies. I mentioned earlier about pre-stack depth migration. What is that? How does that reduce drilling risk? And also geotechnical risk. The insurance company wants to know if a condo complex or resort is built on the South Carolina coast, will it wash away? Very important factor. We also want to look at capital and operating costs, cash flow projections. This isn't actually geology per se, traditional geology, but it's very, very important if one's going to be a geologist involved in the finance sector. You have to understand economics, cash flow, discounted cash flow, present worth. We also have to look at the timeline for these projects. Are they reasonable? And another thing that we do in the due diligence is if a company's come to Wall Street, wants $150 million to execute its business plan, does the company have the geotechnical competence to actually execute the business plan? And then we'll make a recommendation. So what are the skills requires? Broad geological experience. This is not your first job out of college. I've been doing this for 40 years now. I had at least 10 years in industry, and it was very hard starting on my own. But you need broad experience. You have to understand structure, stratigraphy, sedimentology, geochemistry. You want to be able to look at well log, be able to not necessarily interpret the seismic, but understand it, understand basin analysis. And all this requires cross-training in geophysics, engineering, environmental geology, economics, risk analysis, something that's very, very important today. What's the P10, the P-mean, the P90 expectation? So it's really a lot of cross-training and understanding economics. It also helps to be able to write well and present well. Financial geology is a small subset of the geological profession, but it's certainly a very exciting, challenging, and well-paid career. I certainly have enjoyed it, and I would do it again in a New York minute. So Leila, that's kind of my outline, and I'll turn it over to my colleagues now, and look forward to questions.
Great. Thank you very much, Skip. I'm going to go ahead and change the slides over to you, Craig. So when you're ready, you can go ahead.
Well, thanks, Skip, for that wonderful introduction. I think you've done a nice job laying out geoscience in finance from a high level and giving the audience a glimpse of your world. I won't attempt to repeat what you've done. What I'll do is simply drill down further and give everyone a glimpse of my world. And my world is the world of private equity. I am a managing director at Planbrook Road Partners. We're a New York-based investment firm, and we invest in building businesses, also known as growth equity investing. We have about $1.4 billion under management. We recently closed our fund, that is in March of 2009, and we already have 5 financial services companies. We actually have 2 silos. One is financial services, but the other is energy, and we have 7 energy companies in our portfolio, mainly exploration and production companies, but also we have an oilfield services company, and we very typically, very commonly vet alternative energy and clean tech investments as well. Now, why finance? Why would anyone with a geoscience background be interested in finance? And I think it's really an important part of the business. Even if you never go into finance and instead go into, say, oil and gas, it's very important to know something about finance, because finance is all about garnering the resources you need to succeed. And one of the very important resources that any business needs are financial resources. And in the case of finance, how you garner those resources, how you capture those resources make or break companies. You know, we always hear about companies going bankrupt or failing for one reason or another, and commonly they fail for financial reasons, too much debt or whatever. And in finance, what we do and what people in oil companies do in other energy companies is simply match their assets with financial instruments. And this is a graph on this slide that shows this in a very simple way for oil and gas, where we have different reserve categories. We have PDP, which of course is proved developed producing, which is the low-risk part of the asset, and therefore it's best to match that low-risk part of the asset with low-risk money, and that is debt. But as we move out in the risk spectrum to more risky reserve categories, and even to our exploration portfolio, there the sort of financial instrument to match with the asset is the riskier financial instruments, and of course the most risky financial instrument is the equity piece. And equity is my world. I'm in the private equity business, as we call it. And we in private equity firms, we simply provide equity capital, that is that risky capital, to companies. Of course, the public stock exchanges do the same thing we do, but we do it in a private setting. And we provide that portion of the capital structure that suffers the risk of first loss and is typically matched with equity, as can be, matched with debt, as can be seen in this diagram. Now, private equity firms, at their essence, are really fairly simple. We aggregate money from different types of investors, be they institutional investors or university endowments or even family offices. And we make investments on the behalf of our investors. And we invest in companies for business builders. This diagram really summarizes in a very simple way what we do. There are different private equity strategies out there. I think most of you have read about the buyout world. That's garnered a lot of attention in recent years. And of course, that particular strategy has fallen on hard times given the downturn and the capital crunch. But in buyouts, what you do is you typically buy an existing company or set of assets. You apply a lot of debt. That debt really isn't available so much anymore. But by adding debt, you're adding risk to the business. And so what these people do in the buyout business is they improve operations, which is kind of tantamount to running like mad to take the risk out of the business that you applied up front. You probably also have heard of venture capital. That's what's going on in Silicon Valley and elsewhere, and there you're typically building a company from scratch, or certainly early stages. And in venture capital, you take a lot of risk. You take risk in the execution of the business plan. You take technology risk, will it actually work? And you take market risk. That is, if it works, will anyone care? And since you're taking so much risk in VC, you have very high return expectations. You have to be compensated for taking all those risks. What we do at Pine Brook is really private equity the old way. It's less well known, but it's simply called growth equity. And we build businesses, again, like VC, very early, typically from scratch. But we take less risk than VCs. Typically, we like one-risk deals, and that is the risk is, can this management team execute the business plan? Now, it's not to say we don't appreciate technology. We don't use technology. We certainly do, but generally we apply proven technologies. So what do we look for as investors, as a geoscientist in this business? Well, we look for very strong management teams, and generally we think of what we look for in the 4 M's, as we call it: management, macroeconomics, microeconomics, and model. Under management, we look for entrepreneurs. We want passion and high clock speed, so to speak, in our people. We want partners, not employees. These management teams invest alongside us. They're also investors. And we want management teams that have the 3 Ks. That is, they know the business, they know players in the business, and they're well known in the business. Under macroeconomics, we like to invest in a rising economic tide, businesses that are growing. And dislocations are good too. Certainly the shale gas revolution is something that we've profited from in the past, and we look for future dislocations. Microeconomics, as I mentioned, we prefer one-risk deals. And if we do take more risks, we expect to be compensated for that. And we look at how many risks we take in a very rigorous way. And then finally, under model, this isn't so much a financial model. It's how does the business work? And we look to build businesses to last, not projects that we flip very quickly. We want to build a going concern. We want to minimize that risky capital up front. That is the money we spend seeing if this business plan, seeing if this management team will work. And we want the opportunity, once we de-risk the business, to write checks at an attractive compounded rate of return, and we want a clear exit at the end of the day for our investors. So what does this all mean? What do we do? What exactly do we do all day? And let me give you an example of one of our companies. That company is called Comet Ridge Resources. And in this company, we have a very strong management team. It is made up of a fellow who ran a very big region for J.M. Huber. And the exploration VP is a well-known geologist who was with Amoco and was part of their risk team that turned around Amoco's exploration years ago. Well, this team was holed up in a small public company listed in Australia, had a very small enterprise value, but they had 3 very attractive projects: coal seam gas in Australia, Rockies oil play in Colorado, and a nice, little bit high risk but very nice exploration project in the 401 Basin of Washington State. So what could we do to fix this company whose ambition and talent exceeded the balance sheet? Well, what we did is we took the existing structure, which you see here. They had the 3 assets. They had the publicly listed company at the top there and a couple stubs. And what we did is we said to the public company, let's create a JV. You keep the Australian assets. Those aren't interesting to us. We'll take the U.S. assets. We'll take the management team and we'll drop them down into this Comet Ridge Resources LLC, which is our JV. You contribute the people, you contribute the assets. You don't have to contribute any cash because you don't have any. And we will contribute cash and grow the business. So it was structured as a JV. We're partners with the publicly listed parent. And as I said, we contributed assets. They contributed assets. We contributed cash. And this is perfect for us. We commit the capital needed to make the assets work, to give the team the resources they need to succeed, and Comet Ridge, the publicly listed parent, gets these assets developed. So the merits of the transaction were many, and it was truly a win-win deal for the publicly listed parent. It solved their near-term capital issues. It provided them an investment opportunity after we used our cash to de-risk the assets. It allowed them to focus on the Australian assets, which they wanted to do. And for us, we were given access to a very strong management team, access to very strong assets in the U.S. that have turned out to be very good. And it's consistent with our investing style, and that is we put money into the ground. We didn't have to buy the company. We just set up this JV. So that's the sort of thing that we do in real life, where we solve the problem for a management team and for a company, and have allowed this team to invest and create real value in their asset base. What sort of careers are out there in private equity? The typical career path is what you see here. Graduate from college, become an analyst at an investment bank for a couple of years, maybe 3 years, go to business school, get an MBA, come back and become an associate, then the vice president, and then ultimately a partner. This process takes quite a number of years, as you can see. It's an apprenticeship business, and it's a business that is not learned overnight, much like Skip's business. Now, an atypical path, and frankly, it's been my path as a geoscientist, is also available, and perhaps the audience here would be more inclined to go for this. And this is a path where you go to college, you go to graduate school, perhaps get a master's in the geoscience area, join an oil company or some other commercial company that employs geoscientists, learn the business, perhaps get into management, and at that point, go over and become a partner in a private equity firm. And that's been my path. I have a PhD from Stanford in geophysics, grew up at Amoco and Apache, two oil companies, went and did an MBA at MIT, and then came back to the private equity world. So that's a snapshot of my world, and I'll go ahead and hand it over to the moderator.
Great. Thanks, Craig. And Craig, I'm going to go ahead and change the presented slides over to you. And then when you're ready, go ahead.
Great. Thanks, Lila. And thanks, Greg. My name is Greg Jansen. I'm happy to be speaking to you about careers in investment management. As you can see here, after my undergraduate school degree, I began my career as a geophysicist with Amoco Production Company, which was one of the major oil companies. Soon after I started at Amoco, I enrolled in night school to get an MBA. Once enrolled in business school, I was drawn academically into the world of investments. Before I began a career in the investment world, I chose to work in the banking business to gain transactional skills and broader experience in natural resources. So it meant that moving from a technical and operating role and into an investment role would be a long-term transition, but I didn't mind that, and the MBA made it possible. I worked in the banking business in New York City for 7 years, and that role did give me a great deal of experience and overview of how the capital markets and investment markets operate. Slide 3 here shows that there are a fair amount of people employed in the U.S. upstream oil and gas business. That's the green circle on the left. And also a fair amount in the investment management field on the right. And there is a small overlap of people that fit in both circles. And Skip, Craig, and I represent 3 of those people in that area. Conceptually, being a natural resources investment professional is a small subset of the 2 professions, and the combination allows one to draw from both sides and therefore allows for a broader and differentiated set of skills as compared to people that occupy only one circle. Slide 4 provides an overview on what I do in the fund-to-funds industry. You just heard from Craig, who works for a direct investment management firm who will actively in turn invest in a small handful of privately held energy companies. What we do as a fund of funds is commit capital to a series of investment management teams and construct a diversified program for our underlying institutional investors. In this case, Craig's team could be one of several of our natural resources managers. We could also invest with additional teams that focus on the power space, say mining, oil field services, midstream, downstream, etc., to construct an even more diversified portfolio with top specialists. Common Fund Capital, where I've been working the last 15 years, is among the largest and most experienced fund of funds manager in the natural resources and private capital space. So where does a geoscientist fit in within the investment industry? Investment selection is critical to success, and the more prescient insight one can bring to the table when making investment decisions and performing due diligence, the better. I'm no longer choosing drill locations for exploratory wells, but I do keep up with some of the science, the industry trends, and in the event I really need specific technical advice, my contact base really comes in handy on the investment side. I still get out to the field, which is important from time to time. As an example, 2 weeks ago I toured an underground nickel mine in Sudbury, Canada, which was recently acquired by one of our managers. It certainly helps to have an understanding of the technical and operating side of the business when assessing management teams and opportunities. You might be wondering about the pros and cons of the investment world for geoscientists, and specifically in the case of the fund-to-funds business. On the left are positives in my view. One is the ability to move to a 500-foot level and not so much in the weeds, although that wouldn't suit everyone's style for sure. So I'm not choosing a well location, but rather whether I feel the management and the technical team is of high quality and the overall investment opportunity is attractive. Another is the opportunity to learn about the investment in areas that heretofore were outside of my area of expertise. So for instance, the midstream space or the clean energy sector. Some considerations or points that one might view as negative, depending on your focus, is that my 500-foot level is further away from the ground. So I'm not as embedded in the project management details, which, by the way, these details can be very rewarding. My role requires more of a breadth of responsibilities as opposed to depth in one or more specific areas or projects. And so a geoscientist may need additional or supplemented skills and experience to migrate to this sort of role. Otherwise, outside of the fund-to-funds business, there are related areas. The broad institutional asset management industry, that's where most people work in the investment world. So for instance, helping to manage a pool of capital for a college endowment or a pension fund. A portion of that capital would likely be invested in natural resources. Investment consultants are hired by institutional investors to make recommendations on asset allocation and specific manager selection. Craig, again, works for a private capital firm that devotes a sizable amount of their time to direct investments in the energy space. The banking industry hires technical people, mainly engineers, to analyze reserve reports and review cash flow projections for loan collateral and repayment purposes, and also hires people with geosciences backgrounds to become bankers targeting natural resources clients. Strategy consultants such as McKinsey hire technical people with consulting skills to advise clients on specific projects. Leela, that's the end of my prepared remarks, so I'll hand the presentation back over to you. Thank you.
Great. Thanks, Greg. Okay, so what we're going to do now is we're going to go ahead and start taking questions from the audience. So if you have any questions, go ahead and type them into your question box there, and then we'll field those to the speakers. And I'm going to unmute you, Greg, Craig, and Skip, and then we can go ahead and take some questions. Got a couple questions here coming in. One is, how do geoscience graduates find out about these type of firms or these type of opportunities within investment or banking or any of the other finance sector? Basically, those companies or those, can they do internships at companies? Can they get employment coming out with master's or PhD with that type of experience? What is available to them? I know that all of you have said that usually it's later in your career, but is there any opportunity to do internships at such companies?
Well, I'm happy to jump in. There are those opportunities. There are opportunities for summer internships and so forth. They're few and far between, and as we discussed, those two worlds combined, that sliver in the middle, means that there's very few people in this world, although those opportunities do exist. People on the private equity side do hire summer interns, typically, though, with experience coming from technical and sort of MBA-style experience, so building models, building technical models, analyzing projects, and so forth. I would imagine there are some cases where a technical person is hired by, say, a private equity firm, but generally, again, that person would probably have to have additional skills to get hired as, say, an intern. And in the case of the banks, they also hire people on the summer intern side, but also with a combination of skills, both perhaps technical and financial skills combined together.
Yeah, Skip here. It's very difficult to find employment with the financial community straight out of school or just with a few years of experience. But as Greg said, there are opportunities. You know, I had I won't say it was a third party. It was my son worked for me last summer doing research on energy policy. I basically provided a summer job doing, you know, digging through the database of EIA and IEA. But how do you find that kind of thing? You have to go to the trade publications. Oil and Gas Investor is a magazine that summarizes the various financing transactions. There are any number of investment conferences around the country where the private equity people come and meet and talk and present the companies that they've backed and are, you know, either on their way to going public or being merged or sold. But it requires a lot of research. I think you need to identify the companies, identify what they're doing, and identify a key investment manager in that firm and just cold call them. But before you cold call them, do your research and know the kinds of things they do and identify how you might fit into what they're doing, either temporarily or long term.
Yeah, I think, Skip, that's exactly right. I think networking is really the way that these positions are landed at the end of the day. And there are certain conferences, certain publications that we in the financial sector tend to gravitate to. Certainly Oil and Gas Investor is one, but of course there are others, Oil and Gas Journal and Upstream and so on and so forth. There are conferences that we tend to go to both in New York, but also in Houston and Denver and you know, some of the larger energy cities, so to speak. So I think it's all about networking. As mentioned, internships are available. They are relatively few compared to internships, more standard internships for geoscience graduates, but they are there. And it just takes the expenditure of a fair bit of shoe leather to find these opportunities and ultimately land them.
Great, thank you very much. One other question here is asking about coursework while students are in school. You know, how important is fieldwork to this career? How important is either a minor in economics or, like everyone has said, a master's of business and MBA. So if a graduate is taking geoscience courses and headed towards, say, a geoscience master's, you know, should they get a second master's as an MBA, or should they just take a heavy course load that includes economic, math, those type of courses? Would that help them along the way, even if they go, say, towards an oil and gas company and then come through that route towards finance career?
Well, Skip here. I'll say that, emphasize as I did in my talk, that, you know, working for finance requires cross-training, multitasking. I think it starts with a good and broad foundation in geology. The institutional investors, the private equity funds have very, very sharp financial analysts who do the number crunching. But they need a technical opinion that says these numbers we're crunching are real and credible. So as a geologist, geoscientist, trying to get a job with finance, I think that I as an employer want to know, is this person a good geologist? There are lots of people coming out of the business schools, who are very good at building economic models and taking things apart, reading balance sheets, but they don't know about the underlying science. So start the other way. Get a good foundation in science, but also be able to run Excel spreadsheets, be able to do discounted cash flow analysis and understand how to read an annual report and balance sheet.
I would agree with Skip's advice. Referring back to my last slide, the atypical career path, I think having a very solid grounding in the science is very important. And you can learn the business in the business. I think that really is the right way to go. But first you have to begin as a very sound geologist or geophysicist, whatever the case may be. Learn the business in the business, perhaps get an MBA, and then move into the private equity sector.
Yeah, and I would also say that there's not, as you've heard, not one cookie-cutter approach. If you do start with that technical background, more that operating role, it's a long-term career to go from that into the investment management world. But that's the combination of skills that could be really dynamite for a long-term career.
We've got another question here that asks, at what point did you decide to enter into the finance sector, and why did you choose that direction?
I'll start. I actually went to Amoco as a geophysicist thinking that I would likely move more into a business management or finance role. And I, as I think back, people, maybe my mentors, said it's great to have that technical background, and that can distinguish you in the business world or the financial world from other people. And really, that's one of the reasons why I took a job as a geophysicist. Pretty quickly, when I got to Amoco, I decided that I really wanted to get an MBA. That was within a couple of years. That took a while for me to get the MBA because I did it at night. But I really assessed at Amoco the opportunities both on the technical side and saw people that had a combination of skills, and sort of that's why I gravitated in that direction.
And my story is very similar. I also joined Amoco as a geophysicist and was just fascinated by the business side. It wasn't something that I was exposed to really during my graduate work. But when I joined Amoco, which was in the early 90s, the company was going through kind of a soul-searching process. It was not very successful exploring internationally, and it was trying to figure out why. And they went through a reevaluation of the portfolio. They instituted a very rigorous risk process, and lo and behold, they changed their worldwide exploration success rate from around 15%, I think it was, to closer to 65%. And that was effectively with the same cadre of geoscientists. And that just piqued my interest. How could the business side make such a big difference? And it really is a fascinating aspect to the business. It is intellectually equally as challenging and satisfying as the science part. And from my perspective, it was just a natural outgrowth of my career progression.
Well, it's been an interesting transition for me. I really enjoyed working internationally for Texaco. It was very exciting as a young geologist to be on a drilling rig in the middle of the North Sea, and everybody's waiting to hear what you think about the logs or the core. And as I worked overseas, I began to realize that the oil and gas industry is a lot more than just the rocks. And this was the reason I went to work for Amerada Hess as an assistant. I was the junior gopher for the vice president international, but he would say, well, there's an opportunity to explore in Egypt. Would you look at the petroleum law. You know, will we make any money there? How big a oil deposit do we need to find? And I mean, I really didn't have any university education in that, but I went and I met with our engineers, I met with the lawyers, and I said, this is really interesting, the big picture. And so I really am self-taught in economic evaluation, contracts. I also recognized that I needed, as a consultant, to identify experts in that area. And so when I saw an opportunity to set up a consulting firm, and this was, you know, in the 80s when the gas prices were collapsing, and then in the mid 80s when oil prices collapsed, Wall Street had a very large portfolio of non-performing investments, and they needed help. What went wrong? Is there anything there to be salvaged? And I found that getting into the technical, legal, financial aspect of this was very, very challenging, and you know, I love New England. I grew up here, and I said, this is where the money comes from, and there isn't anybody up here who understands the technology. They have to hire a consultant in Denver or Houston or Tulsa. So I basically went around and visited all the institutions and said, hello, there's a firm here. And then I was able to identify people in Houston, Denver, Calgary, London, who were people like me that I met through, frankly, through AAPG and professional societies, and said, well, would you like to team up? You're a crackerjack engineer, and I really need, you know, your skills to be able to help the John Hancock Insurance Company, for example, that had made large investments with a company that was in trouble. So it's really a function of location. I'm in the East. That's where the money comes from. But it was also intellectually very, very exciting to do the big picture beyond the rocks.
Thank you. We have a couple questions here, and I'm going to combine them. The questions are, what are your opinions regarding attending grad school directly out of college versus getting some job experience and then going to grad school for either geoscience or business? And going to grad school, is a PhD needed, or have you found that master's degree is good as well, which is the degree level preference?
This one sounds right up Craig's alley.
Yeah, Dr. Jarchow, what do you think?
Yeah, certainly overeducated, that's for sure. Having done a PhD, it certainly is not necessary for what I'm doing. A master's would be perfectly sufficient. If I had to do it all over again, I would likely take my geophysics work through the master's. I think in the case of geology and geophysics in particular, you really need to take your work through the master's. That seems to be the entry ticket these days to a good job in the industry. And then perhaps do an MBA. You could do it at night, the way Greg has, or actually stop out from the business world and do an MBA full-time the way I did, or learn it yourself the way Skip has. I think each direction is equally viable, and we have 3 examples of that here. But I do think you have to have that strong grounding in the science. Typically that means the master's, but not always. And I would stop at the master's.
Well, I'm having this discussion right now with my son, who's a senior in college, a chemistry and economics major. You know, does he go on straight to business school now, graduate school? And you know, my role as AGI president-elect, I'm talking to a lot of students all the time. I frankly enjoy mentoring and counseling students. But what I'm seeing now is you know, there are a lot of people who go to grad school and aren't sure this is what they really want to be or study. And I urge students to take a break, get your BS degree, get a job for a year or two. It may not be the job you really want. It may be more a technician's job, but it will give you a sense, do I really want to work in geophysics? Do I want to work for a contractor? Business schools now, what I'm hearing, would prefer to have somebody with 2 or 3 years of real-world experience and know that they're very committed. So I guess my recommendation is find a job that you think is going to be very interesting for you, get some experience, earn a little bit of money so when you go back to grad school you're not so broke. But I think that's the way to go. And yes, a master's degree is important, I think, long-term in your career.
Well, all great advice.
Great. Well, that's all for our questions today, and I want to thank you, Skip and Craig and Greg, for joining us today to, presenting on these topics. As for our audience, if you have any questions that were not addressed today, you can definitely email them to us at workforce@agiweb.org, and we'll make sure to send your questions along to the speakers so they can get back to you directly. And we'll be posting today's recorded webinar on our GeoWebinar site soon. You can visit the website to view this webinar as well as any previous ones and to check out our webinar schedule for upcoming webinars. The address for the website is listed here at the bottom of the slide, http://www.agiweb.org/workforce/webinars.html. And this concludes our webinar for today.